right, today we're going to take a few minutes and break down exactly how to read a loan estimate. Loan estimate is something that you get when you're either purchasing or refinancing from a lender, and it's a 3 to 4 page document, and some of it's self-explanatory. Some of it can get confusing. So I'm going to walk you through each section and show you exactly what each section means, okay? So when you look at this loan estimate, right here at the very top, this is very important, okay? Right here, refinance or purchase, and then the loan term, 30 years, 15 year, 20 year, whatever type of term you're doing, okay? So this is a 30-year fixed rate, and you can see that we're doing a VA loan. And this is probably the most important part of this. Right here, is the rate locked, yes or no? So a lot of times, clients that maybe have started with another lender, they reach out to me like, hey, can you review this loan estimate, or is this rate good? And they think that their rate is locked in. So right here, the rate is not locked, meaning you're subject to the market. If the market's improving and rates improve, then great. But if the market worsens and rates like go up, then your rate's going up, okay? So right here, speaking of rate, this is where most people's eyes draw right to this right away, 5.25. So this is a refinance, and in today's market, 5.25 is a pretty good rate. But we're going to get to the most important part on the second page. Second page is the most important part of the loan estimate, because if you're asking what's your rate, the other part of that question is what is the fees associated with that rate? Okay, so we're going to get to that. Right here, your projected payment. So this is principal and interest, and then estimated escrow of $1,219. So escrow payments are homeowners insurance and property taxes. So if you're escrowing those, you're making one payment a month, principal, interest, homeowners insurance, and your taxes are all going into one payment for a total, in this case, of $5,841. And then this shows you exactly what is in the escrow account. So in this scenario, this borrower has HOA dues, but it's not collected in the escrow account. Those are paid separately. Down here, estimated closing cost, $33,000. So right away, if you're doing a refinance, warning bells should be going off, right? Like, wait a minute, the whole purpose of refinancing is to save money in most cases. And if I'm spending $30,000+, maybe this is not the right scenario. So we'll talk about this. And then estimated cash to close. But look, you got to be looking at this, cash from the borrower or cash to the borrower. So a lot of people just say cash to close, and they don't realize if it's actually going to them. Like if this was a cash out refinance, this could be, $20, $30, $50, $100,000 and it'd be going to them. Okay. Second page. This is the most important part. This is the actual information and the details and the numbers of this refinance or purchase. So section A is origination charges. This is the only section that me as the lender control. Okay, all these other sections that we're going to get to, these are third-party services, their taxes, their prepaid interest, their prepaid insurance. We don't control these as the lender. We control section A. So for a lot of lenders, it'll say processing fees, underwriting fees, lender fees, origination fee. They're all the same thing. They all roll into this section A. And then have discount points. Discount points are points you're paying to buy down the rate. So if you take anything from this video, the discount points, if you send me a loan estimate, Jay, I'm refinancing, I got 5.25. Well, if that's at 0 discount points in this scenario, that's a heck of a deal. But when you send me a loan estimate and then forget, or maybe you don't even realize that you're paying $14,667 just to buy down that rate, that might not be the smartest move. Okay, so you have to do a break-even analysis. How much am I paying for the rate versus how much am I saving on a refinance? Okay. Section B, sometimes you see a little bit more here. You'll see an appraisal. In this case, this was a VA streamlined refinance, so there were no appraisal. You'll see a few other miscellaneous fees, a verification of employment fee if that applies. You'll see a few fees here, but section C, services you can shop for. Most of these are going to be title insurance fees. So when you're doing a mortgage with a lender, they're going to require title insurance, lender's title insurance premium. So these are fees that technically you can shop for. You can use any single title company you want. Most of the time, either a realtor or a lender are like making you a recommendation, but you can use any title company you want. So this is just an estimate of how much that's going to be. And then section D is just totaling A, B, and C. So right now, just in loan cost, we have about $20,000, okay? You scroll up here. If there's any recording or transfer taxes, this was a Texas loan estimate. So in Texas, we don't have transfer taxes, but there's some states like Florida and Pennsylvania, and I think New Jersey possibly, that have transfer taxes and recording fees, and some of them are pretty high. So you have to see, that's another part of the equation when you're refinancing to see if it makes sense or not. Prepaids, okay? If you're doing a purchase, you're going to have to prepay the homeowner's insurance premium up front. So you would see 12 months right there for a homeowner's insurance premium. So that's common confusion. People say, well, why are you collecting a full year of homeowner's insurance and collecting it as part of the initial escrow, which we'll get to here in a second. But if you think about it, on day one, when you purchase the home, the lender has an insurable interest in the home. Obviously, they're giving you hundreds of thousands of dollars to go buy a home. They want to make sure that it is properly insured upfront on day one in case something happens. So they're going to collect a full year of homeowner's insurance premium upfront at closing. So when you're making homeowner's insurance payments each month into that escrow account, you're basically setting it aside. And a year from now, when you still own the home and that homeowner's insurance premium comes due, rather than the lender going to you and saying, hey, we need money for the homeowner's insurance premium, it's already in that escrow account because you've been paying part of it monthly. Okay, so little confusion there, but if you're doing a purchase, they're going to require you to pay the homeowner's insurance premium up front for the entire year. You're going to prepay it. Prepaid interest is exactly what it sounds like. It depends on when you're closing in the month. If you're closing earlier in the month, you're going to have more prepaid interest and that's going to be higher. If you're closing later in the month, you're going to have less prepaid interest. And so that's usually because if you're skipping a month, like if you close in January, you're not going to have a mortgage payment due in February. March 1st would be the first payment. So they're collecting some prepaid interest. And then in this specific example, on a refinance, if the property tax bill is due, which in this case it was, the property taxes bill was coming due like during that refinance period, they're going to go ahead and collect the full year of taxes up front during the refinance to make sure that they're getting paid. And then this initial escrow. Okay, so this is separate from the prepaids. The initial escrow, they're going to collect their, depending on when your renewal is due on homeowner's insurance, it could be 2 months, it could be 5 months, it could be 10 months. They're going to make sure that that new escrow account that you're setting up with the new lender is going to have enough in there for when that renewal comes due. So in this case, we're not having to collect too much property taxes. We're only collecting 2 months because the lender is prepaying the full year at closing. And so with escrow accounts, the most you can have in there is 14 months. So usually about once a year, your servicer will do an escrow analysis to make sure there's either enough in there or is there too much or too little. You know, the last thing you want is an escrow shortage where they're going to have to go to you and say, man, we thought your homeowner's insurance was going to be $2,000. It's actually $3,000 a year. We don't have enough. We're short $1,000. You owe us some money, right? And that's what you don't want. Or, you know, positively, if there's too much, if they were collecting too much, they will refund you some escrow. All right. Here's the only other area that a lender controls. All right. We control section A. We went over that, origination fees, lender credits. So if there was any lender credit, and in this case, there's not, it would show up right here. So if you look at this, the loan amount, his new loan amount is $838,000, and we're paying off a loan. The current loan is $805,000. So it's going up $33,000. This loan balance is going up in this refinance example. When you start looking at that, you're like, okay, how much am I saving per month versus how much is my loan going up? In this case, it did not make sense. I advised the borrower, they had already started with a different lender. I advised them, hey, this does not make sense. Look how much you're paying to lower your rate 0.5% or 0.75%, but you're paying, 30-something thousand dollars, well, actually really 20-something thousand dollars in loan costs. I advise them, hey, let's just wait. Let's wait for the market to improve, and let's wait for rates to come down. Or let's look at, if we could, maybe a little bit higher of a rate and we don't have to pay all the discount points. But that is where the meat and potatoes of a loan estimate is. If you take anything from this, be sure when you're looking at that rate, don't get just so focused on the rate. Go down to the second page and look at the origination charges that are associated with that rate. If you have any questions, if you want me to review a loan estimate, if you still have questions on it, please reach out. All my contact details are in the description below, and I'll help you out.